Hey everyone, in this video we'll take a look at bracketed tax systems. And please note, this isn't looking at any particular tax system like the US tax code or anything. This is just looking at bracketed tax systems as objects. So first of all, what bracketed means is that you take the income that you will tax and you break it into categories, and these are called the tax brackets. So all money has to fall within one bracket. And bracketed systems come in three major types. One type is called flat, which means that all income is taxed at the same percent. That's called your tax rate. The second type is called progressive, which means that as income increases, your tax rate increases as well. So the higher dollar amounts that you make, the higher the tax rate on that money. And the third is regressive, which is the opposite of progressive. That means the higher your income, the lower the tax rate goes as you move along. So let's take a look at an example. And let's say we have a progressive tax system, just for example. So the bracketed system looks like this. Money, in other words income, is broken up into different categories. So each dollar that you make falls within exactly one of these categories. So all of your income from $0 to $15,000 gets taxed at a rate of 5%. Similarly, all the money that falls between $15,001 and $25,000 gets taxed at 8%. All the money that falls between $25,001 and $100,000 is taxed at 12%, and then all money $100,001, sorry for this typo here, and above is taxed at 18%. So different dollars that you make get different tax rates applied to them. So for our example, let's pick an income and let's find out how much actual tax you would have to pay. So let's say we have an income of $120,000, and our question is how much tax meaning the actual money, not the rate, how much tax is paid on $120,000? So to solve this problem, we need to apply the bracketed system, apply the tax rates. So we take our $120,000 and we kind of walk along from zero all the way up until we reach $120,000, and as we walk along we apply tax rates to those brackets that we encounter. So in this first bracket from 0 to 15,000, there's $15,000 of the $120,000 sitting in that bracket. So we take that $15,000 and we apply its tax rate, which is 0.05. And we apply the tax rate by multiplying the amount of money, 15,000, times the tax rate, which is 0.05. So we'll compute this in a second, but that will be the amount of tax, in other words, the number of dollars that you pay in tax on that first $15,000. So then for the next bracket, that's all the money between $15,001 and $25,000, of which there are $10,000 in that bracket. Notice that's the difference between $25,000 and $15,001. And then that gets 8% tax applied to it. So same thing for this next 12% bracket, which has $75,000 in it, taxed at 12%. And then finally, we have to look at our income that's above the last cutoff, which is $100,001, so that's $20,000. And we apply 18% tax to that. So this is our tax paid. And now all that's left to do is add all this up. So computing these numbers, we get 15,000 times 0.05 is 750. 10,000 times 8% is 800. 12% of 75,000 is 9,000. And 18% of 20,000 is 3,600. So in the end, what we get when we add all this up is $14,150. So in other words, on $120,000 income, under this progressive tax system, we would have to pay $14,150 in tax. So that's how much tax we pay, but you may ask the question, what percent of your total money is this $14,150? Because you're mixing a lot of different percents, and also each percent has its own weight, like the number of dollars that you're paying that percent on. So we may want to ask this question: what is the percent of our money that we have to pay towards tax? And that's what's called the effective tax rate. Or the effective rate of that income in that tax system. So we won't have a formal definition here, but we'll just kind of translate what does effective tax rate mean. It's the percent of an income that is taken as tax. So the effective tax rate will be different for different incomes, even in the same tax system. So let's go back to our example. In our progressive system, we had an income of 120,000, and we paid tax of 14,150. Just refocusing. So our effective tax rate for this income in this particular bracketed system is just the amount of tax that we pay divided by the total income. It's the same way that you calculate your grade. If you have the total number of points that you've accrued, you divide by the total number of available points. And this comes out to be somewhere around 0.1179, or if you want to write this as a percent, it's about 11.79%. So our effective tax rate in this system on $120,000 is about 11.79%. And that's a mixture of all these different tax rates that we paid on all the different brackets. So just to show you that the effective tax rate can be different, let's just pick a different income. So we'll say the same bracketed system. And now let's pick a new income. And for this we'll pick $37,000. So we'll ask the same question, how much tax do you have to pay, and then what's the effective rate? So the tax paid is, again, we apply our bracketed system. So back to this page, we're looking at this part. We have to figure out how much of this $37,000 falls within each category. And so the first $15,000 is there. So we have, for our tax paid, we have $15,000 at 5%. And then the next bracket, that goes from 15,000 to 25,000, so we cover all that. So we have $10,000 of income at 8%. And then notice in the next bracket, starting at 25,001 and going to 100,000, our $37,000 income doesn't reach the top of that bracket. So we just take what lies within there. So that's everything above 25,000 up to 37,000. So that's 12,000. And that gets taxed at 12%. Okay, so this is our tax because the 15,000 plus 10,000 plus 12,000, that's our 37,000. So if we compute all this, we get 750 from this, we get 800 from this, and we get 1,440 from that last bracket. Adding all these together, we get 2,990. So that's the amount of tax that we pay, 2,990. And so we may want to compute the effective rate of $37,000 in this progressive system. So that's 2,990 divided by 37,000, which comes out to roughly 0.0808, or 8.08%. So even within the same tax system, different incomes have different effective rates. Like our $120,000 had an effective rate of 11.79%, whereas our $37,000 had an effective rate of 8.08%. And that's because of the nature of the progressive system. So all of this work that we did can be applied in a similar way to a regressive system and a flat system. So we're not going to go through those examples. And that's it.